Hello and welcome to my channel. Well, we need to know the types of markets and understand what are the different types of financial markets in which we intend to trade. And then I will explain in which markets trading is appropriate and in which markets it is not appropriate. Well, the first type of market that I want to explain to you and that you need to learn is the sharp market, in which the price rises or falls sharply and quickly. It means that several candles will turn green or red in a row and the support and resistance lines will be easily broken. If we consider these two lines as support and resistance, the sharp market is such that a very fast trend may become upward, or for example, there may be a very small trend change in the middle, but it is done with a very high slope and very quickly, or vice versa. In the bearish mode is the same. In this market, the support or resistance line is easily broken, so how can we know that the market is sharp? At least 3 consecutive candles should be of the same color. That is, for example, we should see 3 green or red candles in a row. That in this market, the trend is very strong, and we cannot count on the support and resistance lines to change the trend. Well, the second market that I want to explain is the range market. In this market, if we consider these 2 white lines as support and resistance, the price moves between these 2 lines. That is, the candles go up to the resistance line and then go back down and reach the support line again and move in this range. So the best time to trade in this market is exactly on the support and resistance lines. That is, the candles go up and make a high, then they go down and make a low. If you have just started trading and do not know much about the psychology of candles, do not trade in the middle of the trend. That is, do not trade here in the middle of the downtrend or uptrend. But the best situation is in these highs. When the price reaches the resistance line, we can trade. If we want to sell or make a buy trade in these lows, so if I want to check the candlesticks, it is almost like this, of course. I did not draw a shadow for any of the candles because for now I just want to explain the type of market. Here, if we consider a support line, the candlesticks will rise and reach the resistance line and the trend will change and become bearish and come down again to the same support line. For example, in the middle of this trend we may have a small trend change. I have specified these on purpose so that you also keep this in mind. And it is better not to open a trade in the middle of the trend. For example, on this candle or this candle, in binary options, the best situation is to be able to trade on the tops and bottoms to trade more confidently. The next market that I want to explain is the trending market, which is the best mode for trading. The trending market is like this. For example, I have considered a bullish trend here, and I will show you the bearish trend later. Well, the price comes and reaches this resistance line and it returns, and in the next trend change it breaks this line and goes higher. A new resistance is created here and it returns and goes higher again. That is, if we look at this high, it is higher than the high before it, and this low is higher than the previous low, and this is an uptrending market. The trending market is made of 5 components, or rather 5 waves, and after the 3rd wave is made, we can be sure whether this market is trending or not, because here the price has risen and a high has been made. In fact, the 1st wave has come, the 2nd wave has returned. The 3rd wave, the 4th wave, and the 5th wave, which is the best time to trade in this market on this 5th wave. That is, the 1st, 2nd, and 3rd waves were made here, and we can be sure that this market has an uptrend. But when the 4th wave ends, and at the beginning of the 5th wave, in fact, this 5th wave is the best time to trade. Of course, we can also trade on the 3rd wave, but the best time is on the 5th wave, and the 2nd and 4th waves are retracement, and it is better not to trade on them. Even if you have a lot of experience and can trade against the trend, the best way to trade in binary options is to always trade in the direction of the trend. I have considered an uptrend here, so I should trade on the third and fifth waves, especially the fifth wave. Well, the bearish type is exactly the opposite of this type, that is, the first wave is made, then the second wave, then the third, fourth, and fifth, and in this bearish mode, it is the best time to trade on the fifth wave to do a sell trade, and the third wave can also be suitable, but it is not advisable to trade on the second and fourth waves, which are retracement. Well, now if I want to show the candles, it will be like this, as you can see. That is, a series of candles will reach this line and there is a resistance line, then a second wave was retracement, then a third wave was able to break the resistance line, then another retracement wave, and the fifth wave has moved upwards. Well, in this video, you learned about different types of markets, and in the next video, I want to explain to you about the bad markets. Until the next video, God bless you.